Facebook announcing a major milestone today. Company now says it has more than 2 billion active users on WhatsApp. Let's talk more about what messaging means for Facebook and other major trends in technology. Joining us now is Heather Bellini, Goldman Sachs' lead analyst for software and select internet companies, coming to us live from the Goldman Sachs Internet and Technology Conference in San Francisco. Heather, thank you for joining us from your own conference. We do appreciate that. 2 billion users on WhatsApp.
Thanks for having me.
That sounds great, except when I use WhatsApp, I don't see a lot of ads and I don't pay for it. Does it matter to Facebook?
Well, WhatsApp certainly matters to Facebook because it's part of the whole Facebook collection of applications, and it's part of the community and it keeps you integrated across all the different applications that they offer, whether that's Messenger, whether that's the Facebook Blue app, or whether it's Instagram. So yeah, I think it does matter, and it shows the utility of the platform that they've built.
Hey, Heather, just switching gears a little bit to Microsoft. You've been an unabashed bull on this name for a very long time here. The stock is up 17% on the year after a bang-up year last year. You have this multiple getting to kind of 15-year highs here. What do you tell investors here to hang on, right? And what is the bull case near term from here?
So it's not just a near-term bull case. I think it's a multi-year and a long-term bull case, because if you look at the company, more and more of their revenue is moving to a ratable business model. It's moving to subscription. It's Office moving to Office 365. It's their on-premise server products that are moving to Azure. It's Windows and offerings like Microsoft 365 that's getting people to pay on a subscription basis for things like Windows. And what that ultimately means is not just more predictability of their revenue stream, but it also means they're going to get lower churn rates over time, which equates to more gross profit. And so, I mean, honestly, I think they're becoming utility, and I mean that in a very positive sense, of enterprise computing. So, yeah, I think it's got a long road ahead of it.
Heather, it's Karen. Let me just have you bounce back to Facebook for a second. I think you have a $250 target. How do you get there? Is it earnings expansion? Is it a multiple change? Both? How do you get to that valuation?
So we look at it a couple of different ways. So we look at it on a discounted cash flow basis. We look at it on a cash flow basis. We also look at it on an earnings basis. And we look at the stock not just on calendar 20. So we actually look at it from a quarter 5 through quarter 8. And so, again, we're looking out more than 12 months. So it's actually a 24-month view of the stock. And we think you don't need a lot in terms of multiple expansion to get to where the company needs to be at our price target. It's more just consistent execution. I mean, there are factors in there, especially related to calendar 21, where you're going to have to make some assumptions on what they do with total expense growth, what happens to overall revenue growth. But we think we're being conservative in those assumptions. And so we don't think it's a stretch at all as you look out over the next year.
Hey, Heather, Tim Seymour, thanks again for joining us. So back to Facebook, or still with Facebook. We talk a lot about the regulatory headwinds, and every once in a while there's talk of, do you break up Facebook? What do you think about that as a catalyst for the stock? Is that outlandish, or is that actually bullish sum of the parts, and how do you look at that?
So, I mean, I'm not an antitrust expert, so first and foremost, I should make sure everyone is aware of that. But look, I think you've seen some interesting things happen. You saw some news yesterday out of the federal government where they're going to start looking at past acquisitions and start to subpoena records from past acquisitions that were under, say, $90 million in revenue. That's obviously the government looking to see if there was, not just for Facebook, but for all of the companies that got subpoenaed, whether there was some pernicious behavior, if you will, that went on during that process. And then you've got the question of whether or not this platform should be broken up. You could do a sum of the parts on it. We don't go about valuing it that way. The question is, again, and this is just from us talking to antitrust experts, and we had Christine Varney from Cravath yesterday speaking at the conference, and it's not illegal to have a monopoly. It's illegal to do something, again, as in her words, pernicious with that monopoly. And so that's the question, is if you go back, is there a basis for the government to be able to undo something that was created. And so, we're going to have to wait and see. But first and foremost, I think the thing we've learned from talking to experts in this field is this is not a 12-month cycle. This is probably something that's going to evolve over the course of the next 5 to 7 years. And I think, again, we've been living with this in terms of its impact on the multiple for the last year or two. It's going to continue. How we feel about the stock is regardless of that. And it's really just based on, is any of this impacting the fundamentals of the company? And as of now, we would say all signs point to it is not.
Okay, bullish on Facebook and on Microsoft. Heather Bellini, thank you very much. All right, let's
trade me a synonym for pernicious.
It's funny. I was just looking up pernicious
insidious?
Squid.
How about
do you remember that whole thing?
Oh, deleterious.
I thought pernicious was a Greek scholar from 1200 AD. Dan, there was some interesting price action in Microsoft, by the way. A lot of volume the last couple of days. The stock's held up.
You think it's held up? I mean, listen, this thing has gone parabolic. It's the largest market cap company in the world, that and Apple. It's not particularly natural, and it's going to come unwound a bit unnaturally. Maybe it does it from 200. They like big round numbers or whatever. But, I don't know. I don't really have much to add here. I don't know who's buying this stock.
Well, maybe if Goldman Sachs is recommending the stock, from what I understand, they got a pretty good client list. So I suspect they might be making some calls or Bloomberg messages.